Welcome to the Investing in Real Estate podcast with Clayton Morris. This is the show where we focus on buy and hold real estate. Why do we do it? We do it for the purposes of creating passive income and legacy wealth for you and your family. If you're interested in finding your freedom number, come over to our website at morrisinvest.com/freedom and download your free financial freedom cheat sheet today. Hey everybody, welcome into another episode of Investing in Real Estate. I'm Clayton Morris. This is the show where we focus on long-term buy and hold for the purposes of creating legacy wealth for you and your family in order to help you hit that financial freedom number. And we've covered a lot of different strategies here on the show over the years. One of those that we've talked about recently with MC Laubischer was an idea of infinite banking. And the two guests that I have on today's show have really put this infinite banking strategy to use using life insurance. My guests today are Bob Scott and Jimmy Vreeland. Nice to have you both on the show today.
Nice to be here. Thanks, Clayton.
Thanks, Clayton.
Thanks, guys. So tell me, first of all, how did you guys get started? Take me back. You mentioned MC Laubischer. You guys were friends with MC. How did you guys get all started in this?
The Ninja, we kind of heard his podcast, and then we just reached out to him. We had already kind of got involved in the life insurance and had started hanging out with Nelson Nash. And, MC, I think he's got the best platform out there right now as far as promoting the idea. So we're like, can we get on your show and talk about it?
Awesome. So let's talk about that. What is infinite banking? What is this idea of using this type of strategy for real estate investing?
So it's essentially you use cash value life insurance as your own personal bank. What do you call your strategy where you kind of have everybody pay off their own personal debt through their HELOC? Do you have a name around that?
That's a good question. I mean, I just call it, using your ninja strategy for paying off your house in 3 to 5 years, how to use your home equity line of credit in order to pay that down. The idea is infinite in that when you have that home equity line of credit available, it's an infinite line of credit. And so many of our investors that we work with will want to do, cash out refinances. And I'm always a much bigger fan of doing a home equity line of credit strategy where you can have an open line of credit that you can reuse infinitely over and over again. When you're doing that cash out refinance, then you get one check one time. And you don't get the ability to rinse and repeat. How does that differ from the life insurance plan, or is it the same thing?
It's basically the same thing, except that we're both telling people to set up an entity where they keep liquidity instead of a traditional savings account, right?
Right.
So the main difference with the life insurance is that the life insurance pays you a 4 to 5% tax-free compounding dividend, whereas if you do it with a HELOC, you have that access to liquidity, but you get no dividend off that money.
Okay, so let's dive a little bit deeper here so that people, if this is over some people's heads here, take us at a high level on this first. Why would we want to do this? And then I want to get more specific on that dividend and how to set this up.
Okay. I guess the high level thing is that it makes absolutely no sense to store your dry powder inside a traditional savings account.
Right.
There's no interest really paid, and the small amount of interest that is paid, you are taxed on it.
So what type of life insurance plan are we talking about?
You need specifically cash value whole life insurance. So the idea is here to have some place, like we said, to store capital that's not at risk to the banking system. So let's say, for example, you've got $50,000 in a savings account. Instead, if you park that money into a life insurance policy, you still have access to that capital. And, there is a fee to the life insurance company for setting it all up, but you earn that back over time with the dividends. But on top of having access to that capital, now you have the bonus of the death benefit and basically, protecting your heirs in the event of worst case scenario.
I'm sure most of your audience is familiar with the Cashflow Quadrant, right?
Sure. And for those of our audience that isn't, it's the idea that, of course, Robert Kiyosaki in the 4 cash flow quadrants, right? To go from being self-employed or being an individual, a sole proprietor, an individual self-employed, to owning a business, to then having a business working for you, and then being an investor, right? To flow between those quadrants, so you're having your money work for you instead of you working for money.
And the whole point is to make your money as a B or an I, and to start acting and behaving like a big business owner or an investor.
Right. Instead of an S, or what's the other one? S would be self-employed.
Or an E.
Or an E, or an employee, right? An hourly cash employee working at Starbucks, right? So you want to get to the business, and you want to get your money working for you.
So a B and an I would never store their dry powder inside a traditional savings account or a mutual fund or a qualified plan. All of their long-term dry powder is inside a whole life insurance policy.
So access to capital. Of course, we have the bonus of the death benefit in case, God forbid, something terrible happens. And that's the whole point of whole life insurance to begin with. But now, take me through some of the mechanics of using it on a regular basis. How does it differ from some other financial products out there?
Well, one, your dry powder is no longer subject to market volatility. For me, that was huge. That's why I don't store any dry powder inside a qualified, a Roth or any other qualified plan.
Gotcha. So it's not tied to the market in any way.
Right. And then it's also, if you look at Cyprus or Greece, occasionally during a bank failure or a bank run, your capital's gone. And we all know that the FDIC is insolvent.
Exactly. So when the banks suddenly don't, because the banks really don't even have your money to begin with, right? They have
go get 10 grand.
Right. They have a fraction of your money in the bank. And if you go and knock on their door and say, hey, I'd like my $50K, they might be able to give you $1,000, right?
Right.
Exactly. Yeah.
So with a life insurance company, if you ask for $50,000 in cash, it's coming to you in 96 hours.
Okay, so it's coming to you in 96 hours. Again, so let's dive a little deeper into some of those mechanics. So it's if I identify a property that I'd like to acquire, walk me through a typical scenario.
Yeah, so let's say you've got $100,000 and you identify a property and you say, okay, traditionally I was just going to buy this house cash, great cash flow on this property, potential for some long-term appreciation. Instead, you send that $100,000 and put it inside of your whole life insurance policy. Now you can borrow against it, and you still maintain the death benefit. You're still going to earn a dividend on a yearly basis inside the life insurance policy of roughly 4 to 5%. So that's baked in no matter what. You're earning 4 to 5% on top of your $100,000. But now you can take a policy loan against the life insurance policy. Basically, the life insurance company is using your life insurance policy and the death benefit as collateral to make you the loan. And there's no requirements as far as looking at what your credit is or what use you're going to have for the money. There's no restrictions. Obviously, ideally, we're creating wealth, we're creating passive income. We're going to use that to buy an asset, but you could use that money for whatever purpose you deemed fit. So you take a policy loan against life insurance policy, and now you can still buy the piece of real estate you identified in the first place. So now that same $100,000 that you were just going to park into the house is now controlling 2 assets instead of 1. That's really where the power comes in over the long haul. So now you're earning 4 to 5% inside the life insurance policy, and that's compounding tax-free. Now you're also owning this great piece of real estate that is cash flowing, and you use some of the cash flow to pay back the policy loan.
That's great. So you don't think there is any restriction? I know, for instance, like with a 401k loan, I think it's up to like $50,000 or something like that. If you're going to do a 401k loan, or a certain fraction of your vested amount within any given 12-month time span. So if I have $100,000 in there, I can use the full $100,000.
if that's what your cash value is. Now, when you create these policies, there is a cost of insurance for putting it together. And you typically will recoup that anywhere between 4 to 7 years, depending on how much or how your policy is set up. So if you bill out this policy and say, hey, I want to put $50,000 a year as my savings into this policy, roughly 70-75% of that will be available as cash value to take a loan against in the first year. But by roughly 4, 5, 6, 7 years, you're now the full amount that you've put in each and every year is available.
That's great. Now, talk about the payback time frame. What does that look like?
That's one of the best parts. You can structure the payback however you want. It's not like a bank loan where you got to make that mortgage payment every single month. You are in complete control. You can say, I want to pay back quarterly, I want to pay back annually, or you can actually defer it completely and collateralize it against the death benefit.
So essentially that means you pay it back when you die.
Wow. That's amazing. So why aren't more people doing this? This is crazy.
That's a great question.
People don't know about it.
Yeah. That's why we're trying to get the word out there about it. Because, we were absolutely blown away when we first heard about this concept. And we were like, this has to be too good to be true. And we started checking up on it, reading a ton of books that are out there about it. And we were just like, wow, this is amazing.
Like it completely changed our investing strategy. We were paying extra principal down as a hedge for a market crash. But now since we have these policies, we don't ever put extra capital into the walls of our properties. We let it stay inside a life insurance policy and collect at least 4 or 5%. Because in the next crash, if there's a liquidity crunch, the bank is not going to give you back the extra principal you paid down.
Yeah, it's exactly kind of like your HELOC strategy, right?
Right. Today's episode is brought to you by Thumbtack. You've heard me talk about Thumbtack. You know how much I love them. Hey, it's July. It is super stinking hot outside. Maybe you've got a pool. Maybe you've got some other yard work that needs cleaning. That's where Thumbtack comes in. So instead of trying to ask your neighbor, hey, do you know anyone that can help me trim these branches back on the house or clean my pool? Do you know anybody? Do you know a guy? Yes, now you do. Go to thumbtack.com, thumbtack.com, and it'll make you super easy to find pros for pretty much any project that you need done. All you can do, you can download the app on your smartphone or just try it on their website. Doesn't matter. And it's super simple to do. You just go there, tell them what you're looking for. So, hey, I'm looking for someone to clean our pool. I'm looking for someone to trim some branches back. I need some plumbing work done. I used them for pressure washing our back patio, and it was fantastic. You're going to submit what you need to them, and then the next morning, you're going to find like 5 estimates right in your inbox from different local professionals that will match your criteria. Now, you can look through and say, oh, I want to hire the cheapest person, or no, I don't want to go cheap. I want to go medium. Or maybe I want to go to the most expensive because they seem like they're going to do a great job. Well, and you can chat with them directly if you need more information. Pretty much anyone you need to hire is on Thumbtack. Carpet cleaners, personal trainers, they even have photographers. So, hey, you're getting ready to head off to college, your kids are getting ready to head off to college, you want to take some photos before they hit the road, hire a photographer. You can do that right on Thumbtack. So check them out. They have 1,000 different categories in 50 states. So go to thumbtack.com, plug in the info you need, and they will get you a local professional within 24 hours. Thanks, Thumbtack, for your support of the Investing in Real Estate podcast. So give me a typical, let's say you're buying let's just use for round numbers to help people. I think examples are always powerful. So let's say the type of property I typically buy personally, 3-bedroom, 1-bath. Let's say it's for round numbers, 40,000, right? Or actually, let's make it easier. Let's say 50,000, 3-bedroom, 2-bath, typical rental property. And let's just say it's going to rent for, $900, $800 a month, something around like that. I identify this property. I've set up this whole life insurance plan, cash value whole life insurance plan, and I have access to this capital. What would that process look like for closing?
So are you going to buy with cash or are you going to get a bank loan?
Well, so if I had $100,000 to work with in my whole life insurance plan, how would you guys do it? What would be a typical way that you would use that whole life insurance plan in order to, because on a $50,000 house, I mean, or even a $40,000, it's very difficult to get a bank loan. They just don't like doing it. And I don't like to bother with them because it's more of a headache than it's worth. But how would you guys do it? If you had $100,000 to work with, what would your strategy be for that property?
I would just call the life insurance company and say, hey, I need $50,000, and they'll wire that money into your account, and then you wire it to the title company, and you at closing and purchase the property.
Yeah, it's just like a traditional transaction, except you're just giving a few days heads up to the life insurance company that you need the capital.
Now that capital is inside. Now does the whole life insurance plan own the property on title?
Nope, you do.
Okay. So instead of like a self-directed IRA, the whole life insurance plan owns, or you own it, not the whole life insurance plan.
Yeah, I mean, it was really appealing to us for the speed. And like, I have a fundamental problem of having to ask somebody to use my own capital.
Yeah, it can be such a pain, and you wonder why it's taking so long to get access to your own money. It's
right.
Incredibly frustrating. All right, so you close on this property, own it. Now you've set your payback. What would your strategy be for the payback of this loan?
Any of the cash that house is kicking off, I would just put back into the policy and leave it there as dry powder.
What sort of loan? Is there an interest rate on that payback?
It's usually 5%, but you can choose to pay back principal only. So I always pay back principal only. So it's now just acting as a savings account for me.
Interesting.
Does that make sense? So you still have that. So if you pay $1,000 back to principal this month, that is $1,000 of dry powder for you next month.
Right. Because it's cash there. Now I can reuse it.
Yep.
Wow. So using the power of that tenant to build your net worth with this strategy.
Exactly. And then that goes to, it's sitting there as dry powder for your next down payment or your next cash purchase of your next property.
What downsides do you see? Any downsides on this?
Not really.
Come tax time. Let's talk taxes.
The downside is when to get the policy going, that first year or the first few years, you have some illiquid capital in there. So that is the cost of insurance. But I'd look at that as just a long-term CD.
Yeah, you need this is a long-term wealth building strategy. You don't want to just get one of these policies and let it lapse or whatever. This is thinking 10, 20, 30 years down the line. And the other thing is if you're up in age, they do have to do obviously a health test and everything else, and it is harder to get insurance if you're up there. But one way around that is if you have kids or grandkids, you can actually get the policy in their name, and you can fund it. You still have control of the capital and full direction over how it's all used. But you're basically putting it in your kid's name, so you're taking advantage of hopefully their younger age and better health.
Wow, this has been fantastic, guys. Thank you so much for all of this information about cash value whole life insurance. This is something that I'm definitely going to look into. It's been something that Natalie and I have been kicking around for quite a while, so I really appreciate all of the great information. How can we connect with you and learn more about some of these strategies?
Go to cashflowtactics.com if you want to really learn about the life insurance strategies.
That's great. Well, guys, it's been my pleasure having you here on the show. Thanks so much for sharing this strategy. I'm definitely going to, with some of that cash that we have and some of those savings accounts, we've been talking for the past few months about this whole life insurance plan and just trying to educate ourselves. It's one of those big pieces of the real estate puzzle that we haven't yet explored in detail. So I'm glad that we did today, because we are going to employ it very soon. So thanks, guys. Bob, Jimmy, it's been great having you here on the show.
All right.
Thank you, Clayton. Appreciate it.
You bet. Thanks, guys. And thanks to all of you for downloading the podcast and subscribing. As always, go back and check out some of the things we just talked about on today's episode, some of the things we referenced from past episodes, including our interview with MC Labusher and others. We'll be back here on Monday, with another episode of Investing in Real Estate. As always, folks, I want you to go out there, take action, and become a real estate investor. Thanks, everyone.